Hello and welcome to the Accounting Tip of the Week. My name is Phil Church, the accounting supervisor out here at Baker Holtz, and I'm here today to talk to you about a new standard in accounting for revenue recognition that actually just went into effect for most private companies. As many of you may or may not have heard, the Financial Accounting Standards Board, or the FASB, issued its standards update a few years ago that simplifies the process of determining when revenue should be recognized by businesses. This project was aimed at removing inconsistencies and weaknesses in generally accepted accounting principles, as well as creating a framework that increases comparability across various industries. You see, in the past, different industries like forest products, construction, trucking, whatever you can think of, all had different or slightly different standards to follow when it came to recognizing revenue. With this new standard, the FASB hoped to eliminate confusion for financial statement users because when you looked at the financial statement, you really didn't know how it all worked. You know, sometimes forest products were recognized as revenue at different times than like a trucking company would, and it all just became very confusing. So this standard is really aimed to simplify the whole process, and it outlines a 5-step approach to determine how to recognize revenue. So the first step is to identify a contract with the customer. Now this can be anywhere from an actual physical contract that was written out, so like for construction contracts they have a physical contract, or it can be an implied contract. So if you're at a retail store and somebody comes up with groceries, there's an implied contract that if they pay for the groceries, they walk out with them. So you have to identify the contract. Step 2 is to identify the performance obligations in the contract. So like with the grocery store, the performance obligation of the grocery store is to give them the groceries to walk out with. With a construction contract, you can have multiple performance obligations. So you could have a performance obligation to build a building, you can have a performance obligation to create a sprinkler system for the building, say, and then you can have a performance obligation to furnish the building. So you have to identify the separate performance obligations. Third, you have to determine the transaction price. So at a grocery store, it's really simple, it's the price of the product. For a construction contract, usually they line out the actual revenue that the company is going to charge for the construction contract. 4, you have to allocate that transaction cost or price across the performance obligations. So with that building construction, for instance, you have the 3 separate performance obligations and you have to allocate it based on what you think those are worth. So for instance, building the building has more value associated with it than actually furnishing the building. So you have to determine how that transaction price is allocated between those performance obligations, because in the 5th step, you recognize the revenue when or as each performance obligation is satisfied. So once the building is done being built, you recognize the revenue that's associated with that. Once you furnish it, you recognize the revenue associated with that. So for many businesses that engage in something like retail, all of this stuff all happens at once. So the timing of revenue recognition isn't really changed by this new standard, but for somebody like a construction contracting company, it can be vastly different based on billing terms, performance obligations, or what have you. And there are even carve-outs for some companies to recognize revenue based on past time, not necessarily the performance obligations. So you need to actually consult with your accountant in some cases to determine how this new standard is going to affect you. So if you would like some help in the accounting for this, or how this new standard might affect your business, go ahead and give us a call at 616-458-1835, or you can shoot me an email at pchurch@bakerholtz.com, or you can come to our website at bakerholtz.com and send any of us an email and we'll be happy to help. And if you have any questions, feel free to ask. With that, I wish you a happy Valentine's Day, since we're recording this on Valentine's Day, and you have a great day. Thanks.